If you haven't already, hit the like button, hit the subscribe, ring that dang bell. It's free, it helps the channel out, and we'll hop right into updates on portfolios, news, all that good stuff. So first thing I wanted to jump into is we'll look at the Robinhood portfolio today. Oh wow, we've climbed out of the red. We're back up over 8,000 here, 8,125 in the account. Our M1 Finance account. We gotta log back in there real quick. Just made a bunch of trades today for our first pie finally getting put together. We spent all day yesterday putting together all these individual pies to get our 100 holdings together. What I found was it's quite annoying to only have 100 holdings allowed. I wish I could have more than 100 stocks in my pies and in my portfolio. And it was a little bit of a pain to set it all up and all that stuff. But we got our $200 working for us here. It's all set out, and we might go back over that here a little bit later. First bit of news I want to rock about. This Tesla driver falls asleep at the wheel. Oh my God. I've always said to people, it's one way or the other. Either the car fully drives or the human fully drives. We can't have this in-between shit going on. Look at that. That guy's dead asleep at the wheel right there. Passed out. His car is driving down the highway. How does it stop? This is awful. And this isn't the first case of this. Like, other people have posted this on Twitter before. This is crazy. This car drove all the way home. What does this mean? Change lane, merged on and off 3 highways in rush hour in the rain. NYC traffic stunned. Huh. Super crazy. Don't know if I trust it that much to do that. Not my style. Meanwhile, this dude's passed out at the wheel right here, driving down the highway.
Don't do that.
Do you honk? Do you honk to wake the person up? So that's a crazy piece of news. We do own Tesla. That might be a little bit of a problem for their cars and autopilot. And things like that. Is it the driver's fault? Is it Tesla's fault? How does that work? Moving on. Keeping with car companies, Ford. Ford got cut to junk as Moody's downgraded Ford to junk. Ford saying it's not a blow. They're saying they're high debt. Ford's got a lot of debt right now, and they're struggling to win over Wall Street on their overhaul, on the turnaround. They've moved away from sedan type cars and more into the SUV and truck market. Hopefully, I like the new Ford SUV. I'm not gonna lie, I love the new Ford SUV. As a rental, when I travel for work, I try to pick that up. I do not own Ford stock, but interested. They do pay a dividend. Maybe they can turn around, maybe not. Maybe it's junk. I like them more than this next one. And this next one we're going to talk about is General Electric here. And I do own shares of General Electric. I'm from Cincinnati. They have a big, General Electric has a big position here in Cincinnati with a lot of their aviation stuff getting done here. I've got family members that work for GE, and their stock has been tanking the past year. Larry Culp is the new CEO. In charge of kind of turning everything around. They've been doing a lot of debt restructuring, selling off portions of the business, trying to get money back up and kind of stick to their healthcare and aviation and things like that. It's been a pretty much a huge suck. GE Capital's been a black hole for them. A lot of other things that they tried to get into weren't really working too well. So hopefully they can turn this around. It's only been a year. The stock did bottom out around like $6, and we're back up to just shy of 10. And GE does still pay a dividend, so hopefully that might turn it around. Okay. And then just the general market turning around, the move away from growth stocks into dividend-paying stocks. And normally this past couple years, I think it's the past 5 years, growth stocks have really outperformed dividend-paying stocks, and now things are starting to shift back the other way, trading 5% high while the Momentum Fund dropped 1.3. So the iShares Edge, which is value factor, jumped 1.8 on Monday, while the iShare Edge momentum factor dropped 1.7. So overall, more than a 3% change swing between the two there. Very interesting. I do run like kind of a mixed portfolio in here. I have some growth stocks, especially with the cannabis stocks, but we do have like PayPal. In the M1 Finance, we did pick up Amazon, Google, Facebook, things like that that are a little bit more growth. So we run a little bit of a mixed strategy. We're definitely heavily weighted towards dividend paying stocks, but we do have a little bit of that growth in there. So that's always interesting. And then right before I cut the stream on, I was really interested in this article, Aurora Cannabis, off the radar numbers in its Q4 report you'll want to know. So Aurora, which I'm heavily invested in here, as you can see, 355 shares for a total market value of $2,100 alone in Aurora. Huge portion of my portfolio, considering there's only 8,000 in the portfolio itself. The big day is nearly here for cannabis investors. On Wednesday, September 11th, following the market close, Aurora will be reporting its quarterly numbers. Aurora is the largest producer in Canada with at least 625,000 kilos of run rate production by the end of June 2020. Thus far, 150,000 kilos. Wonderful, wonderful photo of a nugget there. Aurora's preliminary guidance laid the groundwork for fiscal fourth quarter, so they're pretty transparent. They've been providing sales guidance, so we're kind of expecting what to know here. 100 million Canadian dollars to 107. Company also reiterated that it was on track to achieve positive reoccurring EBITDA during the fourth quarter. However, that means it might not necessarily be profitable. They're still growing. They're growing all over the world at this point. Aurora's gross margin, so because they're such a large producer, they might have the lowest cost marijuana production in the world. It doesn't really have to do with the techniques they're using, just the sheer size of the Aurora Sun and their production facility. They're able to kind of bring costs down doing it all in one place. Of course, that's one side of the coin. We're going to see how well the prices hold up on the other end of sales and things like that. We all know prices are plummeting. International sales, they're moving pretty far, man. They're out there. They started in Canada. We're looking at all over Europe, South America, and things like that. They're looking at the hemp market here in the United States. So there's a lot of growth there. And Aurora Cannabis is certainly not to highlight its operation results or conference call in the company, ballooning goodwill, which stood at $3.18 billion at the end of March. This $3.18 billion represents 57% of Aurora's total assets. Goodwill is simply the premium that one company pays for another above and beyond tangible assets. Some amount of premium is perfectly normal when making a purchase, as it's dangling the carrot that can entice a board of directors to approve being bought out by a larger peer. In an ideal world, the purchasing company will monetize patents and expand upon existing assets to fully recoup the premium that's being paid. In the case of Aurora Cannabis, it's made over a dozen acquisitions over the past 3 years, and nearly all contributed to its rapid rising goodwill. Of course, none has been bigger culprit than its $2.6 billion all-stock purchase of MedRelief. So they're kicking ass, taking names right now. So that's that. M1 Finance, we finally made our first purchase today. So let's go into my pies here for a minute. Take a look at the pies. So our biggest holding is real estate here. We have a bunch of REITs in here. AMT, American Tower, they do cell phone towers. American Realty Trust is a cold storage facility. Whenever you're getting produce moved, frozen foods, anything that needs to stay cold, you would even imagine some chemicals and things like that need to be cold or at least kept below room temperature, or however hot it is outside, they need refrigerated storage. Those are my top two. Annaly Capital Management is a mortgage REIT with monthly payments. Arbor Realty Trust, NRZ is another mortgage REIT. Cone, which owns Cirrus One, which owns data centers, and they're a data center real estate play. for multi-tenant purposes. So they own large facilities of data centers where cloud computing is being held. They handle all the air conditioning, the actual manufacturing of the buildings and maintenance of the buildings and all that, and security. O Realty Income, very popular. Whitestone REIT, very similar to NRZ and NLY. VTR owns a diversified healthcare portfolio of 1,100 in-place properties spread across the senior housing. So senior housing there. WPC, another mortgage REIT. Well Towers, another healthcare REIT. DLR is a digital realty trust, very similar to Cirrus One. Blackstone Mortgage Trust, LTC Properties, Stag, HASI, which is a newer one I kind of threw in there. Hannon Armstrong Sustainable Infrastructure Capital provides debt and equity financing to the energy markets in the United States. The company focuses on investments in two types of project: energy efficiency projects, renewable energy projects. Energy efficient projects reduce the energy use and energy costs of building or facility through the improvements or installation of building components, including heat. So they help people rehab buildings to make them more efficient. And that's the largest part of our portfolio, 33%. And we get into basic materials here. We put P&G in there, Dow Chemical, Stepan Company, Westlake, Eastman, CE, Celanese Corporation, PPG, Ryanair, Advanced Materials, Methane Hex Corporation, Owens Corning, and WD-40, all chemical companies, all doing amazing things. P&G, more of a products company. All these companies are long, stable dividend payers. It took me forever to get these pies right. Energy and utilities. American Waterworks Company, Duke Energy Corporation, Dominion Energy, Enbridge, Southern Company, Aqua America, Excel, BP, Chevron, Exxon, Edison, and NextEra Energy. And we've weighted all these to ones we know most and kind of longer standing, more of the dividend aristocrats that we want to just kind of pour into, maybe a little bit higher of a dividend. We just did energy and utilities. We made some money last night, Chew and Brew. We cashed, was it the 7,500 guarantee that we cashed last night? We did good. We did good. In our industrials, we've got 3M, Boeing, Caterpillar, Eaton, Lockheed Martin. I mean, come on. Quality stocks to throw in the industrial section. Tech. Now, this is an interesting one. I did Disney, AT&T, Verizon as my top three here. AT&T and Verizon pay amazing dividends. Actually, Verizon just upped their dividend payout. These are both dividend aristocrats. Disney, I really love. I think their streaming service is going to kill it in competition with Netflix. I think they own a lot of content, and that's how they're going to separate themselves from other streaming services, is that when you want Disney content, you're going to have to go to Disney. Microsoft, Cisco. Microsoft, I think, again, is killing it in cloud computing. Adobe, AMD, Google, Amazon, Apple, Facebook. These we all put at 1%. Very, very small holdings because a lot of them, Google, Apple, Google, Amazon, AMD, Facebook do not pay dividends. Netflix does not pay a dividend. NVIDIA does. Apple plays a very small one. Micron Technologies plays a small dividend. So those are our dividend payers, but that we kept small. Mainly wanted to dump in our top ones up here. Disney's a great one, man. I fucking love Disney. I think they're going to murder the game. Just with everything they own, Disney owns, they own all of Marvel Comics. They own Star Wars. They own Fox. They own Fox Entertainment, which owns Simpsons and things like that. All the Disney content they own. They own ESPN and all that live sports content. I mean, I think you can't go wrong. If you're looking for entertainment type stocks, I think that's a good one to pick. I also do own Netflix as well. So you got that. Healthcare. A lot of these are REITs or healthcare related. Oh no, I moved all the REITs up to the REIT section. So we've got Abbott Laboratories, AbbVie, Amgen, Bristol Myers Squibb, Eli Lilly, Johnson & Johnson, Medtronic, Merck, Novartis, and Pfizer. Come on, you got to throw some dick pills in there. You know what I mean? Evenly weighted all of these. They're all great healthcare companies. Didn't really care that much. Just wanted to pour some of the pie into the healthcare section. Retail and food. Now here is a little mix of some dividend and some growth stocks. We've got Kroger, Starbucks, Target, Walmart, Costco, Home Depot, Lowe's, General Mills, McDonald's, Kellogg, PepsiCo, Wendy's, and we threw in Vail Mountain Resorts because we like to ski. Maybe one day we'll have enough of Vail Mountain Resorts that we get a free trip every year to go skiing. Who knows, out of the dividends. They do pay a dividend. A little bit of growth there too. So I'm down to play with them. I did live in Colorado for a few years, and I did have I had a Vail Resort Pass every year. That was the resorts I choose to go to, and I follow with their growth and their purchasing of other resorts around the world that all work with the Vail Pass. They're also purchasing a lot of like smaller resorts around the country that then become feeder resorts, similar to what casinos are doing. They purchase all the smaller casinos that are popping up in other cities that then feed to Vegas and feed to Macau and feed to all these bigger destinational stops. So I think Vail's on the right path. I'm okay to own a little bit of it. Finance. Now these are just banks and finance. Easy peasy. I pretty much even weighted it and said let it rock. American Express, Bank of America, BlackRock, SinFed Financial. Of course, I'm from Cincinnati, so Cincinnati Financial Corporation. Goldman Sachs, HSBC, JP Morgan, MasterCard, Morgan Stanley, PayPal is probably the only one on here that doesn't pay a dividend. Peaks Pass, heck yeah, that shit was awesome. PNC Financial Services, which is my personal banking, US Bank Corp, Visa, and Wells Fargo. Everything pays a dividend except for PayPal on here. And then travel and cars. This is a small section here. We've got GM, Honda, Toyota, Delta Airlines, my favorite airline. I don't get to fly them that much. And Tesla we threw in here. We very small weight on Tesla because they don't pay a dividend. They're going through a rough time right now, but we kind of want to start a position there just even a little bit. The rest of these do pay a dividend. I had Ford in here and removed it because of this Ford news. They went to junk bonds. I just don't see it. I do love the new Ford SUV, but they got some work to do before I can put them in the account. Similar with GE. So we put all that together. Here we are. We're down a little bit. That's okay. That's all right. And we'll go from there, you know. I'm going to end the video for now. I will come back live. I'm just going to end this one for YouTube. Please, if you're watching on the YouTube, hit the like button. It helps me. Hit the subscribe button. Ring the fucking bell. Please comment with whatever you want to see. Any questions about finance, cannabis, real estate. I own a rental property. We can always go over that. Lighting. I mean, almost anything. CBD products. Anything you want to hear about. And we'll go from there. I appreciate it. For those of you on Twitch, Chew and Brew, I'll be right back, buddy. I'm just going to end this and start it right back up.